If you told me I could only make one trade for the rest of my life, no more buying and holding stocks, I'd pick this one. It's simple, repeatable, and backed by math. In this video, I'll show you the single options trade I'd rather make than buy stocks forever, and why it quietly beats traditional investing for steady, risk-adjusted returns. The myth of buy and hold. Buy and hold works until it doesn't. It's slow, it ties up huge amounts of capital, and when markets drop, you're along for the ride. But what if you could get paid to buy stocks at lower prices, or simply keep the cash if they never fall there? That's what smart traders do with one powerful strategy: selling cash-secured puts. The trade: cash-secured puts. When you sell a cash-secured put, you're agreeing to buy a stock at a certain strike price, but only if it drops there. In return, you collect a premium upfront. Example: stock is $100. Sell the 90. Strike put for $3. You collect $300 now, and you're obligated to buy at $90 if assigned. If the stock stays above $90, you keep the $300. If it drops, you effectively buy at an adjusted cost basis of $87, $90 to $3. That's buying a discount and getting paid for waiting. Why it beats buying stocks. Here's why this trade quietly outperforms. Cash flow. You earn income every month instead of waiting for dividends. Better entries. You only buy on your terms, lower, safer prices. Higher returns per dollar. You use margin or collateral efficiently, not tying up capital in idle shares. Emotional control. You welcome dips instead of fearing them, because dips equals premium opportunities. It's the difference between hoping the market goes up and getting paid whether it does or not. The real math. Let's look at numbers. Say you sell 190 strike, put for $3 each month. If it expires worthless 9 out of 12 months, that's $2,700 in collected premium. If you get assigned once, you buy the stock at a discount and can then sell covered calls for income. Over time, that cycle compounds. Premium in, assignment, covered call, repeat. That's how pros turn income into long-term growth. The catch: there's no free lunch. Selling puts means you must hold enough cash or margin to buy shares if assigned. You also cap your upside. You won't catch a moonshot rally. But if your goal is steady compounding and disciplined entries, it's one of the best trades you can make. To recap, sell cash-secured puts on quality stocks. Collect income or buy at a discount. Repeat systematically for long-term consistency. It's not flashy, but it's how real traders build wealth on purpose. Thanks for joining us. If you found this helpful, hit like, subscribe, and comment below. Would you rather own stocks or get paid to wait for them?